The market is currently closed for the weekend, so let us look exactly at where things settled at the final bell. As of the market close on Friday, May 29, 2026 at 4 p.m. Eastern Time, NUBURU Inc., trading under the ticker symbol BURU on the NYSE American Exchange, finished the session at exactly $0.1775 per share, marking a decline of 5.59% for the day on an intraday trading volume that surged to over 17.2 million shares. In the subsequent after-hours session ending at 8 p.m. Eastern Time, the stock experienced a mild corrective bounce of 0.79%, drifting to $0.1789 per share. While the headline numbers show a struggling microcap stock stuck in penny stock territory, the underlying reality reveals a massive corporate pivot that almost no one in the retail space is paying attention to right now. The common expectation for a company like NUBURU, which historically built its reputation on high-brightness blue laser technology for industrial manufacturing, is that it is simply another cash-strapped tech startup slowly burning through its remaining capital. The market looks at a 17-cent stock and assumes a slow walk toward bankruptcy or dilutive financing. But the reality that completely flips this narrative on its head is a massive structural transformation into an international integrated defense and electronic warfare company. Just days ago, on May 26, 2026, NUBURU signed a binding definitive share purchase and investment agreement to acquire a 70% controlling stake in Tecne, an Italian defense company specializing in tactical military mobility, electronic warfare, and software-orchestrated defense systems. This single transaction completely shifts NUBURU from a niche industrial laser provider into a dual-use defense platform aiming directly at allied defense markets across NATO. The immediate trading action surrounding this development highlights the intense tug-of-war between speculative retail trading and severe institutional short-selling. When the Tecne deal was first formalized earlier in the week, NUBURU stock witnessed an aggressive intraday spike of over 8%, temporarily punching through resistance near 21 cents as volume exploded far above historical averages. However, the subsequent slide back to 17.75 cents by Friday's close exposes the heavy mechanical pressure hitting this microcap name from dark pools and off-exchange short sellers. Recent short sale data reveals that the off-exchange short volume ratio for NUBURU has been hovering at staggering levels, frequently crossing 53% of the total daily volume. This means more than half of the visible selling pressure isn't standard retail distribution, but aggressive short positioning trying to keep a lid on the price before the acquisition fully closes. At the same time, the regulatory filing data shows significant fails to deliver figures, indicating that liquidity in the stock is becoming incredibly tight as millions of shares are shorted or trapped in settlement mismatches. To properly understand why the stock is behaving this way, we have to look closely at the financial architecture of the Tecne deal and how it collides with NUBURU's current balance sheet constraints. The transaction values Tecne at a pre-money valuation of 52 million euros, with a total financial package representing up to 64.6 million euros in total commitments. To put that in perspective, NUBURU's own market capitalization sits at a tiny fraction of that amount, roughly $31.4 million. The market is looking at this massive disparity and asking how a microcap company can pull off an acquisition of this scale. The answer lies in a complex structure of shareholder financing conversion and cash injections. NUBURU has already funneled roughly 16.692 million euros into Tecne throughout the early months of 2026, including 13 million euros in January and another 3.692 million euros in March. Under the newly signed agreement, NUBURU will convert that existing debt directly into equity, chip in up to 12 million euros in fresh cash as part of a capital increase, and buy another 5.2 million euros worth of shares from Tecne's historical founders. There is also a 10-year revenue-based earnout capped at just under 29.7 million euros. This brings us to the core tension driving the current stock price volatility, the gap between the near-term cash crunch and the explosive long-term projections. If you look at NUBURU's first quarter financial results for 2026, the company reported its very first wave of operational revenue at just $407,644, alongside a net loss of nearly $460,000. For the longest time, the company was plagued by negative stockholders' equity, which triggered non-compliance warnings from the NYSE American Exchange. Management recently managed to lift stockholders' equity back to a positive $2.17 million, momentarily securing their listing status, but their liquidity remains incredibly tight with a weak current ratio. Short-term traders using platforms like SoFi Invest or a basic Robinhood account often see these weak fundamental scores and assume the company cannot sustain its operations. They look at the negative gross profit margins and run away. However, more experienced investors using platforms like Interactive Brokers look deeper into the structural shift and the projected forward numbers. The projected reality of Tecne's business model is what makes the contrarian thesis so compelling. According to their official business plan, Techne is projecting cumulative revenues of approximately $655 million from 2026 through 2030, ramping up from $58 million this year to an estimated $231 million annually by 2030. Because NUBURU will hold a 70% controlling stake, its pro-rata economic ownership would claim roughly $459 million of that revenue stream over the next 4 years. If the company successfully executes this industrial plan, NUBURU will transition from a pre-revenue penny stock into a high-growth defense contractor generating tens of millions of dollars in top-line revenue. This is the classic microcap arbitrage play, where the current stock price reflects the extreme risk of the present moment while completely ignoring the potential scale of the finalized merger. However, getting this deal across the finish line is not a guaranteed certainty, and the primary roadblock is a heavy piece of geopolitical regulation known as Italy's Golden Power Framework. Because Techne operates in the highly sensitive sectors of military mobility, electronic warfare, and national defense, the Italian government holds a legal right to review, restrict, or completely veto foreign acquisitions of domestic defense assets. NUBURU is currently preparing its formal Golden Power notification package to submit to the Italian authorities. While management has engaged in extensive preliminary discussions with Italian officials to align their industrial goals with Italy's national security priorities, any delay or unexpected condition imposed by the regulators could send the stock tumbling back to its 52-week lows near 15 cents. When you zoom out and look at the broader macro environment for online investing, the way market participants handle speculative defense tech plays has fundamentally shifted. Retail investors managing their own capital through self-investing or seeking online investment help on major investing sites are increasingly moving away from pure play tech speculation and shifting toward hard industrial assets. This trend is visible across major mega-cap names as well. Look at how institutional flows rotate through major defensive and aerospace components. While retail traders might be hyper-focused on day-to-day fluctuations in Tesla stock or Apple stock, or chasing the massive artificial intelligence waves in Nvidia stock, the smart money is quietly building out positions in infrastructure, digital resilience, and non-kinetic defense technologies. NUBURU is attempting to position itself precisely at the intersection of these two trends, using its proprietary blue laser intellectual property to develop high-energy directed weapons and electronic warfare systems. For the average retail investor checking their portfolio on the Fidelity mobile app or executing short-term strategies via the Robinhood app, a microcap stock like NUBURU requires a completely different risk management mindset compared to stable individual brokerage holdings like blue-chip tech or diversified Fidelity mutual funds. It's a space dominated by high volatility and rapid shifts in market sentiment. Comment below how many shares of NUBURU you currently hold, or if you prefer sticking to safer, large-cap options in this volatile environment. The sheer volume of over 17 million shares trading hands on a Friday shows that despite the small market capitalization, there is an active trading community constantly turning the float, searching for the exact inflection point where the company's financial health transitions from weak to stable. Let us break down exactly what NUBURU's core business model looks like under the hood, stripping away the recent defense headlines. Founded as a pioneer in industrial laser technology, NUBURU's primary innovation was the commercialization of the blue laser. Traditional industrial lasers utilize infrared light, which is highly reflective when striking metals like copper, gold, and aluminum. This reflectivity leads to inefficiencies, structural defects, and high energy waste during industrial welding and additive manufacturing processes. NUBURU's blue laser technology operates at a wavelength that is absorbed up to 20 times more efficiently by these industrial metals. This allows for faster, cleaner, and completely defect-free welding, which is critical for manufacturing electric vehicle battery cells, aerospace components, and complex consumer electronics. This is the original technology that attracted early venture capital and eventually led to the company's public listing. The problem was never the physics. The problem was commercial execution and the massive capital required to scale industrial hardware sales. NUBURU found itself trapped in a cycle of high research and development costs without the massive commercial purchase orders needed to achieve profitability. This is what led to the severe cash burn, the breakdown of stockholders' equity, and the subsequent collapse of the stock price over the past year. By creating NUBURU Defense LLC and pursuing the Techne acquisition, management is effectively executing a survival strategy designed to piggyback on established revenue-generating defense contracts while finding a dual-use military application for their directed energy intellectual property. Instead of trying to convince commercial automotive manufacturers to overhaul their assembly lines with blue lasers, they are shifting their sights to military mobility, anti-drone defense systems, and non-kinetic electronic warfare, where profit margins are traditionally much higher and backed by government defense budgets. As we look toward the future, the forward-looking outlook for NUBURU stock resolves around a stark binary choice between two distinct paths. In the optimistic scenario, the Italian government grants golden power clearance without imposing restrictive conditions, allowing NUBURU to finalize the 70% stake in Techne by the second half of 2026. This would allow NUBURU to consolidate Techne's revenues onto its financial statements, instantly satisfying the higher $4 million equity requirements for the NYSE American Exchange and removing the non-compliance indicator from its ticker. As the consolidated revenue from tactical vehicle programs and electronic warfare systems begin to hit the books, institutional investors utilizing advanced platforms like the Interactive Brokers Trading Desk or managing automated allocations through Schwab Intelligent Portfolios may start viewing the company as a legitimate small-cap defense technology player rather than a speculative penny stock. A re-rating of the stock based on a true price-to-sales multiple against $58 million in near-term revenue could trigger a massive short squeeze given the heavy short interest currently concentrated in the off-exchange dark pools.
Conversely, the risk case is equally clear and severe. If the Golden Power framework rejects the acquisition or places severe restrictions on the transfer of intellectual property, NUBURU will be left holding millions of euros in converted debt in a foreign entity without operational control. This would force management back to the drawing board to address their ongoing cash burn and weak current ratio, likely resulting in highly dilutive equity offerings or structural toxic debt financing that would erode existing shareholder value. Furthermore, if they fail to meet the heightened exchange listing requirements by their upcoming deadlines, a delisting to the over-the-counter markets would severely damage liquidity, making it difficult for standard retail brokerages to even execute trades in the stock. In summary, the current situation of NUBURU stock is a textbook example of a dramatic divergence between public market perception and structural corporate reality. The broader market, looking through the lens of standard online investing sites and basic price feeds, sees a stock down significantly over the last 12 months, burdened by historical net losses and an ongoing listing compliance battle. They expect a quiet, eventual exit or endless dilution. But the deeper reality is an aggressive, high-stakes pivot into the international defense sector via a binding majority stake in an asset projected to generate hundreds of millions in cumulative revenue. The massive trading volume and intense short-selling activity indicate that the market is rapidly trying to price in these binary outcomes. Until the Italian regulatory decisions are formalized and the consolidation of assets begins, investors should expect continued aggressive daily swings as expectation and reality battle for control over this microcap defense platform. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.